welcome to the SpeakIn webinar on rebooting the Indian economy, opportunities and reforms. While we're all aware that the Indian economy has been slowing down since 2017, and with the COVID lockdown, the IMF has downgraded India's economic outlook to a contraction of 4.5% in 2020. Expects a recovery of 6% in 2021. But it's time to look beyond this as business owners, salaried, and households to understand what is the silver lining and what are the opportunities and policy focus that emerges from the COVID economic crisis for India. For that, we have with us Sachchidanand Shukla, the chief economist for the Mahindra Group. Prior to the Mahindra Group, he was the chief economist for Axis Capital and Enam. I have personally been reading his research publications since 10 years now, and I've found them very insightful. Welcome, Sachchidanand.
Thank you so much.
To start with, I think let's spend a few minutes. Great. To start with, let's spend a few minutes to understand important things about the COVID economic crisis before we address the silver lining, the policy, and the reform measures. So my first question is, why was India's growth falling before the COVID crisis, and since when?
So, first of all, thank you so much, Kanika, for having me, and it's a pleasure to be interacting through this platform. As far as the growth question goes, I would like to begin by quoting an old proverb, right? Unless we change direction, we are likely to end up where we are headed. And why am I quoting this or starting with this quote is essentially, if you look back, the growth, the India growth story has been actually slowing for quite a bit now. In fact, 8 or 9 quarters to be precise. And the growth has slowed for a variety of reasons, which are both structural as well as cyclical. So I'll just go back to these 3 or 4 key reasons, which in my opinion are the causes. And therefore, unless we address that, we will not really be able to change the direction and will end up even lower. And that's how this quote is relevant for us. So the first thing that I want to highlight here is that India was actually struggling with balance sheet recessions, right? If you look at the bank balance sheets and corporate balance sheets, they were under stress, they were under pressure. Corporates were over leveraged and top lines were under pressure. If you look at, say, BSE 500 or whatever sample size, BSE 100, NSE, I mean Nifty or Sensex, you'll actually see that for the last 8 out of 10 years, the top lines have really flattened out. And if you look at the earnings per share growth, right, EPS growth, you typically start with a double-digit 15 to 18% kind of a forecast. And as the year progresses, every quarter you see the earnings being cut, and we end up with a low single-digit EPS growth for the sample size. The other problem has been the bank balance sheets. And if you look at banks, right, and you know the accounting entities, so nothing left on the right side and nothing right on the left side. I mean, essentially that's the state of bank balance sheets. And if you're having NPAs of double digits, the problem is banks typically have leverage of say 15 to 18 times, even if it is say double digit. The moment I say that 10% is the NPA, the bank is technically bankrupt. So this has been the problem with these two balance sheets. The other balance sheet that has held up India's growth story across some of these crises that we've seen in the past, including the global financial crisis, is the household balance sheet. Even there, what we saw was disposable incomes for household actually flattened out from say 2000 or FY12, and they've averaged, and consumption also decelerated. There was availability of finance from NBFCs and banks. This is an important point, right? Households now consume over 80% of their disposable incomes as against just about say 70% or less in FY11. And that has impacted the savings rate and also their ability to consume. Because like I said, if you look at the nominal GDP growth, that has also come off. So these are the balance sheet issues that I spoke about. And it has been driven largely on just one engine of consumption. And even a Boeing aircraft, which is renowned and which people have been using for ages now, needs at least two engines to grow or to continue. And then there are some other things that happened by accident or by design. What I mean by this is several reforms were initiated in a short span of time. So if you go back to say 2016, 17 and thereon, what you saw was very powerful and potent reforms being say attempted in the Indian economy. What I'm referring to is demonetization, GST, RERA, accounting standard changes, and also another important reform, which was the bankruptcy code, the IBC. All of these were very, very disruptive, and these happened in a very short span of time. In a span of 6 months, we had these rolled out. What happens is when you do something like this, there is a shock to growth, right? These take away a little bit from growth in the short term, even though they are great from a medium term or long term perspective. And this has also cost us in terms of growth and jobs. The last bit that I want to speak about is global. And we have seen the US and China get into a trade spat, and there's been a huge rise in uncertainties because of income inequality, and therefore the political changes across the world, which are actually going against the grain of globalization. So when you look at these factors, right, domestic balance sheet issues, a lot of reforms, and the global scenario which has suddenly changed, what we see is growth actually coming under severe pressure. And also, an important point that I want to highlight towards the end of this is we also got into monetary policy framework wherein we targeted inflation. And that by definition, again, impacts growth. Now, it irons out volatility in growth over a period of time. But what we saw was a growth shock getting compounded because of these multiple reasons, multiple factors that we saw. So what I would say is we got caught in a perfect storm of global issues, some structural issues, and some cyclical issues. Some of these were by design, like the reforms, and some of these were accidental. So by design and by accident, we got into a major storm, and that has caused growth to really slow over time. And now we have the COVID shock, which is completely unprecedented.
Okay, great. So how does the COVID economic crisis compare with the global financial crisis of 2007 and 8, especially in the context of the Indian economy? Are there any benign factors such as oil being at $40 a barrel right now compared with $130 a barrel in 2008?
Well, Kanika, I mean, on a lighter note, right, it has shown me one thing, at least, which is common with economists and scientists and epidemiologists, etc. See, even these scientists and epidemiologists, virologists, they can't agree on one thing. I mean, we have heard so many theories by now. We have heard so many forecasts on when this is likely to peak, how this is going to mutate, how this is going to spread. We had this theory of the virus getting weaker during summers, stuff like that, right? So essentially what you have seen is that we still don't know anything about it. I mean, think of it. The crisis started from March, as we know. I mean, the rest of the world knows. Obviously, it started much earlier in China. But after this became public knowledge globally, and we have 3 months that have gone by, and we still do not really know how this is spreading, hows and the whys of the virus. You have seen from WHO that this could also be spreading via air in terms of not just contact through these particles. So the point I'm making is this is a crisis where we are still groping in the dark. We don't really know anything which is very useful as far as the spread and the containment goes. You have seen in the US, China, Japan, some of these economies, for example, Japan and Singapore, they've seen a second wave that has hit them. And therefore, this makes it extremely difficult to really talk about in futuristic terms. Now, coming to the economic facts, I think this is a crisis which is truly unprecedented and truly global. And why am I saying that? If you February end, the IMF actually came out with a forecast saying 160 economies will have a positive per capita income in 2020. Come March, and by end March, early April, when the IMF came out with that outlook, it said 180 plus countries, 183 to be precise, will now have negative per capita incomes. So within, I mean, from end March to early April, you had 160 countries forecast to be growing, having positive per capita, 280 plus having negative per capita. So it was that massive and that global. I mean, so many economies being hit by one thing. If I were to put a figure to the losses, a $9 trillion loss has been estimated till now. This might go up, like I said. We still are yet to see the peak across economies. And therefore, right now, we're sitting at a 9 trillion estimated loss on a global output basis. More than 100 billion of portfolio outflows have been seen from emerging markets. And this is more than 3 times the global financial crisis, which we all thought was global and the biggest crisis that we've seen in our lifetimes. But within a month of this COVID outbreak globally, we saw more than 100 billion of funds flowing out of emerging markets. And the IMF has got unprecedented number of calls for emergency financing from countries. So what you see is there has been a big demand as well as supply shock, which makes it very, very different. And I think I can very safely say that this is a crisis which is na bhuto na bhavishyati, right? Neither in the past have we seen something like this, nor, I mean, I hope we see this in the future, because this is truly global and truly unprecedented in terms of magnitude. Some of these figures that I quoted essentially tell you how big the shock is. And I think this clearly makes it very, very difficult for us to really say with some degree of confidence as to how we are going to exit. And even the exits, if you see the way the economies are reacting globally, whether it is the central government in India or the state governments, each government is taking a different view and has a different response function. And therefore, it makes this crisis truly the worst that we have seen in our lifetimes. This has clearly not happened in at least the last 100 years. In terms of sheer economic magnitude, I can really cite some evidence. This is truly the worst economic crisis since at least the Second World War. If it doesn't really improve, we will probably going back to the troughs of, say, the 1930s, when the US economy underwent that shock. So I think this is truly unprecedented. We have never ever seen anything like this. What compounds the problem is it hits both the demand as well as the supply side. And if you look at governments and economies and politicians, we all know we can handle one part of it very well. So if it is a demand crisis, we know what to do. We have a template. If it is a supply side crisis, we have a template. We know how to respond, how to enhance supplies. But because it is a truly unprecedented crisis, and the other fact that compounds the problem is this is a medical crisis. There's a health crisis, and we don't really have a solution. We don't have a vaccine. We don't know when this is going to end or how it is going to end, which makes the economic reaction by politicians or governments or central banks so much tougher. And therefore, I can only say that this is a crisis which is na bhuto na bhavishyati.
Great. And what are the silver linings compared with the global financial crisis?
So There are a couple of redeeming things that I see in this shock. Like one of them you mentioned in your question. So you've seen oil being at 40, and when I look at IMF's latest forecast, which they came out with in June, they're not forecasting a much different oil price even a year out, right? So the $40 per barrel that you quoted is unlikely to go up much higher than that, which gives us a big respite on the current account. In fact, India has seen a current account surplus in the last quarter of FY20, and in FY21, we will have a small current account surplus. Now, why is this important? It is important because the Indian economy, in every single crisis, if you go back, gets hit by a rupee which depreciates dramatically. So, I mean, the most recent example I'll walk you through is 2013 taper tantrum, when Ben Bernanke just mentioned that the Fed is likely to withdraw the accommodation. You saw the markets really tank, and rupee came under such pressure. And this was a double-digit depreciation in a very, very short span of time. And therefore, the rupee being stable, I mean, relative to some of these other comparable economies, rupee has actually been very stable. The current account is in a surplus, which typically is what compounds India's problems. We are a twin deficit economy, which means we have a current account deficit and we also have fiscal deficit. So what compounds is the twin deficits. This year, surprisingly, we will have a current account surplus. What it does, Kanika, is because we ran a small surplus on the capital account as well last year, and even in FY21, we'll have a capital account surplus, which means you will have excess funds flow in the economy, and that takes care of some of the liquidity stress as well. So that is point number one. And that is remarkable, that is unprecedented for the Indian economy, because that has been our Achilles heel. The other positive that I see, and which is different, is if you look at the rural side, it has been remarkably stable. In fact, if I were to look at GDP components this year, if you look at agriculture, if you look at industry, if you look at services, only agriculture is likely to see a YY growth in FY21, right? Which is significant, because industry or manufacturing or services, all of these are going to degrow. As you know, a lot of people have forecast the economy to degrow minus 5% this year, right? So if the rural side actually sees an increment in YY growth this year, it will take care of a large part of our population, and which doesn't really undergo an income shock. And you have seen that manifest in a record Rabi crop. We will also have a good Kharif crop. The monsoon forecast is pretty decent. They're saying it will be normal. And the government has spent nearly 1.5 lakh crores already on the rural side. So if you have bulk of India's population, roughly 50 to 55% people on the rural side, being taken care of, or they don't really see an income shock, I think that's a great positive for the Indian economy. So I think, yes, the crisis is unprecedented, but we have at least these two positives that take care of some of these issues.
Great. Thank you so much. So, as we all know, it would be critical to increase household income and revise the MSMEs. And together they form the backbone of the Indian economy, and MSMEs especially account for 29% of India's GDP and employ over 120 million workers. In light of the above, could you decode the Atmanirbhar package for us? What was the extent of the package as percentage of GDP, and how does it help the households and the MSMEs?
Right. So Kanika, you just mentioned how important the MSMEs are. Let me, just reiterate the importance bit. So we have about 63 million odd MSMEs, which are say 30% of India's GDP and about 48% of exports. And they're also very, very critical for jobs. And they account for about 22 to 24% of the workforce. In fact, just about 5 states, which is UP, West Bengal, Tamil Nadu, Maharashtra, and Karnataka, they account for over half of these SMEs. And this is an extremely critical segment for the economy. Maybe we have some slide as a backdrop to be able to understand the Atmanirbhar.
Yes, I'll just share.
Right. So if you look at what the government has actually done, and this is, I'll come to the MSME part in a bit, but just let's try and look at what the government has done. They have announced a 20 trillion rupee package, which is roughly about 10% of the GDP. And bulk of it is actually premised on government guarantees, which is 5 trillion or 2.5% of GDP. Then you have credit, which is another 2.5% of GDP or 5 trillion rupees. And the rest, if you see, the bulk of it is through liquidity from the RBI, which is about 8 trillion or 4% of GDP. Now, the real fiscal spending is going to be just about 2 trillion out of this 20 trillion. And we need to understand this so that we can probably understand the MSME bit slightly better, because what I'm trying to say is bulk of the government response is by way of either guarantees or liquidity or credit. When we go to the MSMEs, and I can just probably, yeah. So if we go to just the MSMEs part, there has been a 3 trillion rupee package that has been announced. And this is an emergency line credit without collateral and at low interest rates. And there's 100% credit guarantee for this. And there is a 12-month moratorium on principal, right? So no guarantee, no collateral, and basically a 4-year tenor. This is likely to benefit about 4.5 million MSMEs. There is also some subordinate debt of about 200 billion. And the government has also spoken about equity infusion. So there is a fund of funds with a corpus of 100 billion to be set up. And this could probably help MSMEs get equity infusion of say 50,000 crore. And Kanika, you would remember what the government did also was they've revised the definition upwards for investment limits for MSMEs, right? And they've done some small things such as say global tenders are being disallowed for up to rupees 2 billion to enable MSMEs to participate in government procurement. The government has also said all governments, including the center, state, and central government units, to clear all receivables of MSMEs in 45 days, right? So if you look at what the government has really announced, it is a substantial package aimed at the MSMEs. And as of July, the numbers that I saw last, public sector banks have given about 1.2 lakh crore out of this 3 lakh crore collateral free loans. But remember, execution always is the key. And because the MSME space typically is too localized and too, is prone to a lot of these demand supply shocks, etc., and they're largely informal. A bulk of them still do not get any benefits from the package that the government has announced. So I think this is something that will be a problem. But progressively, I think MSMEs will be able to avail of some of these government initiatives. And going forward, we'll probably also learn to fix them as we move on. Like I mentioned, the government has cleared all or promised to clear all receivables in say 45 days. And there's a humongous number actually. So the receivables are run into say 2 to 3 lakh crore kind, and the government has withheld these payments, making life difficult for MSMEs. So I think the government is also beginning to try and respond as we move. But like I said, this is a large space. This has been in a spot of bother even otherwise. And the crisis, COVID crisis, makes life a lot tougher for them. And a lot of them still are not able to avail some of these initiatives, the benefits of some of these initiatives that I spoke about.
Great. And from medium to long-term structural measures that may be there?
Yeah, so if you look at the response, see what a lot of governments have chosen to do during this pandemic is focus on the short term, right? what they've done is infused a lot of money into the economy. They have tried to give money to enterprises, to families by way of unemployment benefits if it is the US, or say small businesses when it comes to UK. If I were to look at all governments, a lot of them have announced big packages, right? So if I talk about say Germany or Italy, done is they've announced a package which is 29 to 30% of GDP. But bulk of their effort is just like what the Indian government has done. They have actually focused more on credit, more on liquidity, etc., rather than putting in a lot more money. With the exception of the United States and United Kingdom, right? They have actually, and even Japan. So Japan, half the stimulus package has gone into real spending or relief measures. But the point I'm making is, by and large, almost all economies have gone this way. How is the Indian response different here? And that is where the medium to long-term measures come in, right? What the government has chosen to do is strengthen the supply side, which is, I mentioned about the rural doing better, the agri doing better. The government has chosen this opportunity to free up agriculture. And see, this is something that has not been done over the last 70 years. People, I mean, economists, policymakers, everybody has been talking about it and how it is absolutely vital or critical. But we have actually not seen some of these things. So, for example, the government has said they will amend the Essential Commodities Act, which is a good beginning. It just tells you how, say, determined the government is to address this issue. What they've said is there is going to be a fund to strengthen farm gate infra. They've said agri marketing reforms, essentially wherein farmers can sell their produce directly. And I think we are seeing some of this in Maharashtra, in Mumbai, for example. Farmers are able to bring truckloads of, say, veggies and some of these produce to your doorstep. And I think this is something that was really, really required. And the other things that the government has done, and which I must talk about, are, say, one nation, one ration card initiative being linked to some of these state governments really doing these reforms, so that when you put money into the funnel, right, it reaches the right people. I mean, through the DBT system that we have. It's absolutely critical. The other thing that they've emphasized about is privatization of public sector units. So there is a new public sector unit policy, which will limit the role and number of public sector units. And I think that's absolutely vital, because the private sector needs areas or spaces to grow further, right? So if you look at some of these other things, they've also emphasized private investment in coal, defense, aviation, etc. And one more important thing that I want to highlight, and which is also important from MSME perspective, is they've spoken about decriminalizing Companies Act and enhancing ease of doing business. I think it's absolutely vital for all businesses in the country. And therefore, I think we should also look at the medium-term piece, which is very different from some of these other governments across the world. Everybody's trying to focus on the short term. What this government has done is also looked at slightly medium-term reforms, which will enhance the growth story going forward.
Great. Thank you so much. Could you also help us understand how the repo rate cuts and monetary easing can transmission down to the end borrowers, especially households or MSMEs?
Right. Kanika, if you look at MSMEs as a space, right, they're too large a space. We just spoke of some numbers, 63 million in numbers, and a lot of these are informal, very small, very localized. They don't typically have access to funds, right? And banks also, given the condition we are in, I spoke about, I mean, I started off with the banks being under pressure, bank balance sheets under being pressure. They would obviously be risk averse at this point in time, right? And therefore, MSMEs have some other issues. They're very vulnerable to payment delays, like I mentioned. Some of these micro and macro shocks also have a large impact on them, and they could trigger defaults. And therefore, I think the way to solve this can be done in maybe a couple of steps. The first could be you can probably link them up with larger supply chains and networks, right? So that your risk gets dispersed. And that can help you get some of these loans plus the equity that I spoke about, the government program that I spoke about, the 3 lakh crore package, etc. So that can be used if you probably make them more amenable to linking up with larger supply chains. Second issue is that of transmission, and that has been a challenge in India. Right now, if you look at what has been happening is the RBI has cut rates dramatically. The repo is at its lowest, and yet you find that a lot of these banks are not really dispensing credit. So right now, if you look at it, roughly about 8 lakh crore per day basis gets parked with the RBI. So instead of lending it onwards, banks are finding it easier to park it with the RBI, even if it is fetching them just about 3.5 or 3/4 in terms of interest rate. And that I think is problematic, because what you saw is that the government reaction is premised on liquidity and credit and guarantees. If this doesn't happen, it will become a problem going forward. The other issue is that of rate of interest. Now look at an economy like the US, for example. US 10-year is at 0.6 or 0.7%. I mean, less than 1%. Look at Germany. Look at some of these developed economies. Everywhere you see they're able to borrow at less than, say, 1% for a 10-year tenure. In India, we've seen this number at, say, 6%, close to 6%, 5.8, 5.9 and all that. Essentially, if your GDP growth is -5 and you're borrowing at 6% or 5.8%, how can you make up for that? How will you repay that loan ever? I think that also is a big problem, not just for MSMEs, but for borrowers as a whole. I think that is something that we need to look at and address. The rate of interest is falling. It has fallen over time, but it needs to fall more. And that is why this 10% sort of differential, when GDP is -5 and you're borrowing at 5 plus, that 10% delta is not conducive for any business. And I think rates need to fall further and much more dramatically than they already have. And we'll probably need to find ways around it. The RBI governor has spoken about it. The finance ministry has spoken about it. But we can probably do that. The other thing is some little bit of tweaks. For example, if you look at MSMEs, we are now making PPE kits, more than 5 lakh kits a day, and they've also started to export. And please remember, 2 months prior to this, we were not making any of these kits, and suddenly India is exporting, the MSMEs largely are exporting some of these kits to the rest of the world. Similarly, if you look at the casting industry, right, automobile spare parts, etc., we have all sorts of technology and competent people, and maybe the small scale industry, which is linked to this industry, can really gear up and do certain things when it comes to exports or even the domestic market. You look at a very small thing like agarbatti sticks, right, which is important from an employment perspective. And even there, little bit of tweak on machinery and credit, you can generate employment for 40-50 lakh people. So I think while there are challenges, we have also seen over time that some of these models can work, and some of these segments within the MSME have been able to really move forward.
Great. And have the RBI operations on the TLTRO helped the lending side?
Well, see, the RBI has actually had to resort to the targeted long-term repo operations as a tool to enhance liquidity in the system. What it tells you is that because the repo rate cuts were not really leading to transmission, and we've had a transmission problem for much longer in this economy. It's very unlike the US or the developed economies where the central bank cuts rates and it is immediately passed on to the borrowers. In India, we've not really seen that. In fact, we have seen hardening of interest rates in certain sectors like, say, auto loans. So we've seen instances where the RBI cuts rates, repo rate, but the auto loan rate has gone up a little bit. So I think because of some of these concerns, the RBI came out with targeted long-term repo operations. which essentially means that the banks borrow 1 to 3 year funds from the central bank at the repo rate, but they call it targeted because the central bank wants them to actually use these funds into a particular segment. It could be investment grade corporate debt, it could be MSMEs, it could be certain exporters or real estate. So the term targeted means that the RBI gives you a special dispensation. You borrow at say repo rate, but you have to definitely lend it onwards to the particular segment prescribed by the RBI. So yes, this has been an innovation. We've seen this for the first time being used by the ECB in 2009, and the RBI has adopted or adapted that model now because it wants to push credit to certain segments in the economy. And this has been of help lately, and the government, like I said, within the MSMEs, the number that we see now is 1.2 lakh crore out of the 3 lakh crore being dispensed. Now the rate of disbursement probably is a bit slower, but at least the sanctions are worth 1.2 lakh crore. So even if it is say half of that, it should really during the next couple of quarters, we should see the 3 lakh crore being dispensed in the economy, especially to the segments that need it. So I think the TLTRO experiment has been useful, but you will need to see a little bit more push from the Ministry of Finance as well as the RBI, and hopefully this starts to work in the specific segments that the government wants to really move.
Great. So would the recovery for all the sectors and the regions of the country follow a similar trajectory? If not, what sectors or regions would recover sooner? And do you want me to share the slide?
Yeah, please. So I think one of the important things, Kanika, is if you look at how we went into this problem, we had a simultaneous pan-India lockdown, right, for 21 days, and then it was extended a few times. Now, when you see the unlock patterns, right, it is staggered, and we have had certain relaxations in unlock 1, and then they've increased the relaxations in unlock 2. But what we're seeing is very differential, say, degrees of relaxation. Each government is taking different steps. So, for example, if you look at the industrialized states of Maharashtra or Tamil Nadu or Gujarat, they're responding very, very differently. In fact, as we speak, in certain municipalities of Mumbai, the lockdown has become much more stringent, and over the next 10 days or the 15 days, it is going to be extended, etc. So I think this is an important point that we need to understand. And this is what will impact your segments and sectors. Because, like I said, if Maharashtra, Tamil Nadu, Gujarat, etc., some of these industrialized states actually go in with much more stringent, say, lockdowns, whereas some of these other states are unlocking, it will lead to a very differential recovery. So what you have on this slide, on the left-hand side, is the recovery pattern. So as you move up, the recovery is slower, and the closer to the bottom you are, the recovery is swifter. On the right-hand side, what you see is extreme right, the impact of the virus is going to be much higher, and the closest quadrant on the right-hand side are the segments which will recover faster, and also the impact of the virus is lower. So with this framework, I think let's probably start with the lowest quadrant, right, where the virus impact is low and the recovery is swifter. So wellness, pharmaceuticals, FMCG, diagnostics, home entertainment, online education. I spoke about agriculture and rural, right? Some of these have actually done very well. In fact, like I mentioned, the rural probably is the only segment which will see YOY growth. Pharmaceuticals are actually much in demand. FMCG, we've seen certain categories. I mean, we've seen the likes of Britannia, etc., report much higher sales in certain categories. And things like online education, home entertainment, etc., have done really well. If I move to the exact opposite quadrant, right? So where the recovery is going to be slower and the impact is going to be higher, the extreme right top quadrant, you can see segments like real estate, aviation. As we all know, nobody really wants to fly like before. Automobiles, shared mobility, right? Entertainment, QSR, physical apparels, travel, leisure, and stuff like that. I think those are the segments that will see uh, recovery much later because governments have actually clamped down on a lot of these activities in the key states. Some of these services segments will really have a tougher time in terms of recovery. See, one thing, Kanika, I want to make clear is that in manufacturing, etc., right? If I have a say need or demand for a particular product, I can postpone it for say the next quarter or later when things are better. But in services, what happens is a lot of these this demand gets extinguished. It doesn't come back, right? I can't postpone it. So the topmost quadrant that we just spoke about, which are going to get hit, actually belong to the services sector where I can't postpone the demand. So if I have to actually watch a movie or take a taxi ride, I can't postpone it. That demand is gone forever. And therefore, to that extent, these sectors will be impacted much, differently than some of these durable kind of demands, which if I need a TV or a fridge, etc., maybe I can postpone it to, say, Diwali or thereafter. The other quadrants, I mean, if I move to the tepid recovery, the top left quadrant, uh, so organized retail, commodities, offline education, etc., are also going to be very slow when it comes to recovery. You've seen that online education, while it continues for schools, etc., a lot of this governments have yet not come out with their timetables. In fact, the last notice that I saw was for higher education that things will only begin from September onwards. So basically, what you're saying is you've lost almost 2 quarters, and therefore that is going to impact your top lines and bottom lines in these segments. And the exact, yeah, sorry. So some of these sectors that we can actually focus on are going to be, say, healthcare. We spend very little when it comes to the healthcare segment. Even smaller economies than ours spend a lot more as a percentage of GDP. India spends just about 1.3% of GDP, which is the lowest, and I'm including center plus states, etc. Right? So what you will see from here is that the government focus, because politicians are going to be answerable now, because this pandemic scare is going to be there with people, you will see higher spending and a greater focus on this segment. When you say healthcare, it involves hard infrastructure, which means hospitals, wards, beds, etc. And there is also a services component, which is the doctors, nurses, and the service element. You will see a significant focus, and this is a multi-year segment which is likely to benefit, and this is going to be probably a multi-decade segment as well. So if you were to look at one segment that will definitely do better, I'm not saying things will improve in 6 months or 12 months, but from a medium to long term, you will see a lot of focus by the government and the private players on both the hard infrastructure in healthcare, which is these buildings, hospitals, etc., and also the service part. And this will create not only growth, but also employment going forward. And you've seen things like medical tourism, etc. So basically, I'm saying the whole segment will really do well, and it's going to be a multi-decade story from here on. The other thing is use of technology, and digital probably is a better umbrella word for all of this. And we are seeing this in education. You've seen Byju's and Vedantu, etc., seeing a huge, say, surge in traffic. And a lot of schools, as we speak, have begun to conduct their classes online, right? And that has been a savior, and education happens to be a big segment in the economy from a services angle. And people by and large, I mean, whether you're in the rural areas or the urban, you would want this segment to really continue, and that continues. In fact, education also supports a lot of informal jobs, the private schools, etc. And in the hinterland also, a lot of jobs depend on this. So therefore, I think the focus is really going to be changing on digital delivery of education. And anything which has got to do with digital, I mean, the prefix of digital, you can expect things to really move in that direction. Even for durables, we've seen, say, Mahindras, for example, we are trying to sell stuff online. People are selling houses now through online portals, etc. And because of this focus on digital, you'll see governments actually trying to come in, trying to tax some of this because they're really short on revenues. And you will see this trend really gaining traction. So from
Great.
yeah, sorry.
Great. Thank you so much. Just building on from this, even IMF has pointed out that monetary and fiscal stimulus is not enough. So, what are some of the long-term reforms that would be needed to have sustenance and growth?
Yeah. So I think the way things are, we will need more of the things that we spoke about. If you look at the global responses, like I mentioned, some of the countries have done, say, 30% of GDP kind of fiscal stimulus. The US Fed has actually been buying uh, everything that is there in the market, including equities, corporate bonds, corporate paper, and things like that. So they've been basically buying stuff worth $1 million every single minute that we speak, right? So I think this just tells you what some of these governments are actually doing, and therefore, when it comes to India, the responses that you can expect uh, are going to be focused on monetary. We still have space, like I mentioned. If your GDP is -5 and you're still borrowing at 5 or 6%, that doesn't really help any of the businesses. And therefore, I think we still have scope for rates to go much lower, and the repo can actually go down a bit. Market rates, which is the 10-year or whatever market rates that we refer to, CD, CP, whatever these instruments are, these can actually go down even further. We'll have to do more of that. On the fiscal side, if you look at it, Kanika, we have, say, 70 odd percent debt to GDP ratio. The IMF has come out with a stat just yesterday saying that within just 2-3 months, the debt to GDP for rest of the world has gone up by 20% in 2 months, right? So everybody is actually loaded up on debt. If you look at the leeway, we can also still do some more of fiscal reforms. I think as we move forward, as we unlock a little more, what you will see is a demand stimulus coming from the government. We'll have to stimulate demand because right now what you're seeing is in unlock, you are releasing some of these supplies when it comes to businesses opening up, showrooms opening up, etc. What you don't have is a demand stimulus. But once we've unlocked the economy to an extent, you will see the government coming in with a demand stimulus. I'm expecting at least 1% of GDP. So on monetary, you will see rates actually going down further or should go down further. On the fiscal side, you will see the government actually coming up with a stimulus which is at least 1% of GDP, in my opinion. Another thing that we can do is, like the slide you see right now, all of these businesses have to undergo this huge challenge of compliances, right? I mean, it's a maze. If you look at this slide, I mean, nearly 70,000 compliances a year, and these are a quarter of these or a third of these are pertaining to the central government, and the rest are state governments. So if the government actually does something on ease of doing business, and please remember these compliances, they undergo changes at least 3,000 times in a year. So 3,000 of these are changed every year. So just think of it. If you're an entrepreneur, would you rather spend your time dealing with these many compliances, central, state, etc., or you would just focus on innovation and enhancing or coming out with a product or service that fulfills some market need. So I think this is something that we'll probably have to do a lot better, and the government has been talking about it. They've been trying to target the ease of doing business metric, and we have seen substantial improvement over there. But I think you still need to make life a lot more easier for us, for entrepreneurs, and we have a long way to go there. So if we complement some of these, say the monetary and the fiscal and the ease of doing business, and also I think the way we get out of this whole lockdown thing. So reopenings, like I said, will be gradual. This is like Abhimanyu's Chakravyuh, right? It was very easy to enter the lockdown, but how we come out of the lockdown will actually impact sectors, will impact states and businesses which are residing in those states. So therefore, I would probably put a lot more emphasis on the reopening as well as to how we do it, the manner in which we do it, and what are the kind of things that are going to be allowed versus disallowed. So what I would urge everyone to think is, think of states, think of regions, think of sectors and companies. Don't take the macro approach, because like I said, we went into this problem together. We are all facing the same storm, but we are all in different boats. So if your business is in a particular state or dependent on say 3-4 key states, and all of those are into a very staggered unlock process, it will impact your recovery. And therefore, I think the framework I would advise everyone to use is, you need to think of states, regions, sectors, and companies. And I think that should be a useful framework for everyone.
Great. And any long-term reforms that you would like to talk about,
Yeah,
other than the ease of doing business?
Yes, I think, see, this pandemic gives us a great opportunity to rethink the India model. Can we go on to being a better, a more efficient, more environment-friendly economy? I think we'll need 3 basic pillars to demonstrate this or to achieve this. One is, we need to demonstrate a change in mindset, right? We will have to show a paradigm shift in thinking. What is the sort of economy that we want? Is it going to be more private sector led? I think that is something that we need to emphasize. The government has said they will privatize, but we'll need to monitor the progress over there. The other thing is, we've seen a stigmatization of capital, right? So if you're an entrepreneur, if you're a businessman, you are viewed with suspicion. But I mean, think of it. I mean, the whole economic model really rests on the ability of entrepreneurs or businessmen to generate growth and jobs, right? The government can't do it forever. This is a bad year, the government is going to do it, but it can't do in 21, 22 and some of those years thereafter. And therefore, can the government really show a different mindset? Can we have some kind of trust between entrepreneur, government and consumers at large? I think the trust factor is very, very important. We need to have that. And then we have to have the states as partners to growth. So I think that is one. Second is, we need to articulate our intent very clearly. What are the new engines of growth going to be? What segments, what sectors? I think the government needs to be very clear about it. How are we going to get employment, right? How are we going to get growth? For example, do you want to focus on urbanization? When you say, I want to use this approach, will you then therefore say that we'll create 20 new cities or 30 new cities over the next 5, 10 years, right? So it has to be backed with some kind of progress. How do you revive manufacturing? So just saying that companies will get out of China doesn't mean they will come to India. I mean, they have other places to choose from. Therefore, what are you going to do with the revival of manufacturing, etc.? So do you have a special process? Do you have special enclaves like the Chinese had, or the SME model, or also the infrastructure-led story? I mean, you know, the $1 trillion story on infrastructure. We've heard that forever, right? We need to put it in action. Will the government actually lead the way in creating infrastructure? And then the credibility, right? I mean, everything that you say and do has to be credible. I think this is something that is extremely doable. I think if we do this, if we take this approach, we will really emerge out of this crisis a much better economy qualitatively. See, it's not about just 7% or 8% growth. The quality of growth also really matters. And therefore, I think these three pillars are probably going to be the key if we want to transform into a much better qualitative economy.
Yeah, I would completely concur. And with the deep corporate tax cuts and GST reform, I think that was very positive. With better ease of doing business, single window of clearance, I think we can see more manufacturing come to India, especially from China, and with a industrial policy push as well.
Right.
Great. Thank you so much. We have some questions for the audience. Could I just take one of them?
Sure.
So this question is from Ravi that COVID-19 has already ravaged the economy. We're also seeing tensions with China. How bad would the impact be, particularly for industries which are heavily reliant on China? And are sanctions the only way to counter Chinese aggression?
See, the first bit, over a period of time, and this is not just the Indian economy, actually, every single economy has become a lot more dependent on China from a supply chain perspective. We are all taught in finance, right? Don't put all your eggs in the same basket. But somehow the world has chosen to put all their eggs in the Chinese basket. Now is the crunch time. Everybody is thinking how to diversify from that. Certain industries, for example, the automobile industry, some critical components which are not very high in terms of value. So, for example, the airbags or some of the safety components. So, in a 10 lakh rupee car, for example, I'm just using a hypothetical example. These may cost, say, a few thousand rupees. But the problem is, you can't really have a finished product without these inputs, right? And in a short span of time, it is not possible for any economy, leave aside the Indian economy, to be able to undo what has happened over, say, the last 1 or 2 decades. And therefore, I think it is going to be a big challenge. While we can try to do some bit of it gradually, and we are trying to do that in the pharma space, we are trying to do the API bit in India. Similarly, in automobiles, similarly, say for textiles, if you have to have those garments, you will need to import some of the inputs, cotton and stuff like that from there, especially China. So I think we are far too dependent in several categories, but this is something that will have to be done over a period of time rather than in just one instance. And therefore, we are trying to do some of these things. It will take time. Some of your sectors will get hurt, like any other economy. And it is also not really advisable to pull out immediately or start looking for alternatives. Even if you get an alternative, it will be expensive, and therefore your consumers or your sectors or industries will hurt if you were to try to do that. Therefore, I think what I would say is this is going to be a long haul. This is something that each sector will have to really evaluate and really take steps on. So just in time to just in case sort of a pivot that businesses will have to use, and it is going to be a multi-year process. Sorry, the other bit I forgot. I mean,
are sanctions the only way to counter Chinese aggression?
Okay, no. So I think in part I've answered that. It can't be just one strategy. You'll have to think of all the dimensions. Only sanctions will not work. And like I said, in some areas, the Chinese are the only ones who supply some of these inputs, right? So rare earth elements, for example, the Chinese have a monopoly. So you can't really get it even if you want it from somewhere else. So I think you'll have to evaluate it sector by sector. And there is no one short solution for this. It will be a multi-year process because what you're seeing is a multi-decade deepening of these business ties and dependence. And therefore, you can't really undo that in just 1 or 2 quarters. So it will be probably a process.
Thank you. Sorry, just one more question, if we could very quickly answer. Is there any hope for the automotive sector in the coming months? And please share your views for OEMs and dealerships.
So I think the auto sector has been in trouble. Demand has been a problem even last year. This year, what we're seeing is some pent up demand as the economy got reopened. You've seen numbers get better. But I think it will still take some time for us to be able to reach the 2019 peaks, right? When it comes to passenger vehicles, CVs, etc. So there are segments within the auto space also which are doing well. So for example, two-wheelers. If you look at some of these bike manufacturers, they have reported decent numbers. The other segment is tractors, for example. Tractors, June numbers you will see for the industry flat to positive or positive for June. May it was just about flat, -1%. So within the auto space also, you will see segments that are doing well, which have some kind of a demand pull when it comes to tractors or two-wheelers from the rural sector, or something that is not very high value. The other thing that you will see is people, if this COVID scare remains for long in the economy, right, you will see people prefer their own transport rather than use public transport. And that also augurs well for demand for private vehicles. But depending on the per capita income, depending on the income profile, the demand for that will manifest in different segments. It could very well be two-wheelers rather than say a very high-end four-wheeler. So I think this is something that we will see manifest in demand in segments within the auto space as well.
Great. Thank you so much for that. A very quick fun round now. Could you identify the quotes from these economists? I'm not a Marxist.
Well, I guess you have the answer there in the sentence itself. Karl Marx.
Right. Okay. Let's see if you can answer this one. I'm in favor of cutting taxes under any circumstances, for any excuse, for any reason, whenever it's possible.
Well, I was not a very big fan of this comment, right? But ever since I've started working, I've really empathized with this line of thinking of Milton Friedman.
Okay, great. Just okay, just two quick ones. If you put the federal government in charge of Sahara Desert, in 5 years there'll be shortage of sand.
Yeah, this is a very interesting one, and I guess it could be Milton Friedman, if
Yes,
I'm not wrong. Yeah.
yes, that's true. No complaint is more common than scarcity of money.
Can I give it a pass?
Great, that's Adam Smith. Thank you so much, Sachchidanand, for your insights, and thank you for answering the audience questions as well. And it's been insightful, and we really look forward to these reforms actually now materializing in the Indian economy and the growth moving up.
Thank you so much, Kanika and SpeakIn for having me. It's been a great pleasure. Thank you so much.
Great. Thank you so much.